Hi everyone, Donna here. I'm the owner here at Bookkeeping Made Simple, and continuing on with preparing for tax season, we're going to talk a little bit about some of the CARES Act provisions that you may not be aware of. And before I really delve into that, as always, if you enjoyed these videos, please like, share, subscribe. Let me know. Comment below in the comments if there's anything in particular you want me to cover. We have had a bit of a crazy week. I made a video yesterday and I forgot to upload it until this morning when I realized I forgot to upload it. So I have been making my videos every day. I just forgot to actually follow through. That's okay, it happens. And I'll upload this one just as soon as we're done. So the CARES Act, if you it covers up to $10,000 in wages per employee. This is where the payroll protection comes in. This is why the payroll protection is supposed to be forgivable. Not all payroll protection loans can be forgiven. You have to have met the minimum requirements of, you spent that money on payroll, mortgage interest, or rent, or utilities, and that kind of thing, just to keep your doors open. So you reduce your federal tax deposits for withholdings related to payroll. So there's a lot going on, and there's a lot of changes, and that is, again, that's why tax season is starting late this year. It's because there's so many changes that have to do with coronavirus relief that the IRS is still, issuing guidelines and trying to making sure that we all know what to do. Some of this is a little bit crazy. Group health plan expenses. If you have a group health plan for your employees, those are considered qualified wages, even when there are no other wages that are being paid. So if you didn't, you do get a payroll tax credit. There's an eligibility for the credit. The threshold drops to reduction of gross receipts by 20% for 2021. Before, it was by at least 50% of the comparable quarter in 2019. There was a 100 employee delineation for determining the relevant qualified wage base. Now there is a 500 employee delineation. So that expands the number of small businesses that are available. A small business, by the way, the actual definition of one has fewer than 500 employees. 500 employees or fewer. So by expanding this to 500 employee delineation, it means all small businesses. And I know the small businesses I work with, small doesn't begin to apply to them. They are micro businesses. They are solopreneurs. They are a single person working in their business, maybe a couple of people. And most of my businesses that I work with have fewer than 10 employees. So this really doesn't apply to most of the businesses that I work with, although I do have a few that are a little bit bigger. If you receive, this is new, if you receive payroll protection loans, you may still qualify for the employee retention credit. So make sure that you are talking to your tax preparer and that they know what's going on. This is retroactive to the CARES Act. It does allow new employees who were not in existence for all of part or 2019 to be able to claim the credit. There's some other changes that really don't apply to my clients, but I'm going to go ahead and talk to them. If you are a governmental instrumentality, which makes no sense to me, none. certain organizations chartered by Congress, colleges, universities, organizations providing medical or hospital care. That one makes a little bit more sense. I do know that the hospitals in my area furloughed a lot of very skilled nurses and doctors back in March, so take that what you will. So the takeaway on this is the IRS is still trying to decide what they want to do about all the COVID relief measures that are being implemented, and we are still not sure. There are some risks that are involved in taking out a second round of payroll protection, and so a little bit on how to mitigate that. We did receive a recent risk alert. I didn't receive it. It was sent to CPAs, and I'm not yet a CPA. But some of the things that we are told is to make sure that our clients who are looking for payroll protection understand their responsibilities as they accept the loan. It is a loan. You do have to provide relevant, timely information. Complete, accurate, all the things that you usually have to do. You can't lie to the government. They will find out. And it is the client's responsibility to sign, certify, and submit anything. So basically, if you lie on your payroll protection loan, I don't recommend doing that because you, clients, can get in trouble. We, professionals, accountants, lenders, can get in trouble. So the AICPA, sometimes I think faster than I can talk. Does anyone else have that problem? As I have been studying, the AICPA really does have quite a bit of power. They are a special interest group, and they are the association for CPAs. And so they give out standards on accounting and auditing processes. Now, their standards on auditing are limited to non-publicly traded companies, but they are very important and relevant in that process. So they are giving out a standard on consulting services, and they are being very cautious about making sure that the client, that is you folks, understands that they have responsibilities. Everything does not fall on the consultant, which would be the CPAs or tax preparers or accountants. A lot of people really want to say, they want to shift all the responsibility to their accounting professional, and that's not appropriate. That's not what we do. It's certainly not what I do. I consult with my clients. I talk to them about, these are some possible fits, and these are your responsibilities under the law. Okay, if you want a payroll protection loan, that's great. Let's get you correct, let's get your correct information to the lender, and understand that if you don't get it forgiven, you do have to pay that back. So if you take a payroll protection loan and you use that money for something other than payroll, other than what's covered, which is wages, salaries, group health insurance, as I just said, qualified mortgage interest if you are purchasing your shop or office, or rent, and utilities. Those can be covered under payroll protection. Nothing else is. Marketing is not covered. So if you take out a payroll protection loan and you use it to do a bunch of marketing, that's great and it's a deductible expense, but you may then have to pay back the loan. It is the client's responsibility, it's the borrower's responsibility. You can't shuffle that off on us. Um, basically, when a CPA provides documentation to a lender, what they're providing is called attest services. They're saying, hey, lender, this is correct, okay? This is as accurate as we can, to the best of our knowledge. And so there are some ethical guidelines that go along with that, I'm huge into ethics. I'm huge, there's a couple of things that almost sound like they contradict each other. One is, if the government is going to be handing out money, even though I disagree with that most of the time, in this case, I think it's appropriate, because I think it was inappropriate for them to close businesses. But if they're going to close your business, they should have to pay you for it. And I have a lot of concerns about that are just finance related, things like, how are we going to pay this back? I have a lot of concerns when it comes to a lot of government spending. But while I am in favor of taking advantage of every single loophole in the tax code, I'm not in favor of being unethical. So I say, take advantage of every possible legal loophole, but make sure they're legal. Make sure that you can defend it. Make sure that if you're ever audited, you can defend it. So if you accept a payroll protection loan, make sure that that money is going to the right place. If you want to get one, please make sure that you are giving correct information to your lender or to me, so that I can provide correct information. Because if I find out later that a client has lied, falsified any information on a loan application, I don't want to work with that client anymore. That makes me look bad. So I'm aware of the cognitive dissonance that could be part of this, but I am all for taking advantage of the law to the fullest extent. I am not in favor of breaking it. Bending it, maybe, just a tiny bit. But anything that's going to get me in trouble or my clients in trouble, anything that I can't go to the IRS or to a tax attorney and say, this is why, this circular, this provision in the tax code, this guidance from AICPA, this is why I did what I did, this is what makes it legal, then they have something that they can go back and defend. If I just say, well, we just thought that we could say that the prostitutes were consultants, I'm not going to be able to defend that. So, and yes, I've had more than one client try to do that. So there's a lot of things that we have to be aware of as accounting professionals, because we are providing specific services to you, to your lenders, that are meant to help you. But if a client is less than ethical, then it becomes really difficult, and it's something that we as accounting professionals need to be aware of. Okay, so early in 2020, President Trump deferred. He did not forgive. He deferred payroll taxes. If you as an employer decided to take advantage of the deferment, and all that means is that it was postponed. It does not mean you don't have to pay them. It means you have more time to pay them. The idea for that was that we would have employers withholding less out of their employees' taxes during the COVID crisis, so that employees and employers would have more money available to keep the business open, to pay their bills, to do all that. It was an election. You did not have to defer. You could have just continued as normal. However, if you did defer payroll taxes, and I touched on this yesterday, I've just read a little bit more about this today, the repayment of the payroll taxes that were due but were deferred has been extended to December 31st of this year. Therefore, any interest penalties, etc., will not begin to accrue until January 1st, 2022. So that's an important thing to know. If you make your payments by January 3rd, 2022, they will be considered timely because of the New Year's holiday. So yeah, that's a few important things. So tax season officially begins February 12th. I am accepting appointments for tax clients starting February 12th. Some important things to bring into your tax interview. Some things that you need to send to me prior to me even looking at your taxes. One, if you are one of our bookkeeping clients, you will receive a discount on tax preparation. The reason for that is that we have lots of time then to gather your materials. We have them at our fingertips. We already have access to your bookkeeping. I actually have other people doing the bookkeeping in my company. I've been focusing more on tax strategies and tax preparation, at least for this quarter, and probably for next quarter. So some of the things a new bookkeeping client needs to provide to us in order to make sure that your books are correct and that we can do your taxes. Okay? We need your last filed income tax return for your business. Excuse me. The reason for that is we need to be able to set up your balance sheet correctly. And the reason for setting up your balance sheet correctly is we have to keep track of your assets. We want to keep track of your assets because those are depreciable over the long run for taxes, both in your financial books, but also for taxes. Now, we want to take every single tax credit, deduction, anything we possibly can for our business owning tax clients. Depreciation is a huge one, huge. So we want to make sure that all of your trucks, trailers, vehicles, buildings, computers, office equipment, anything that you use in your business that is it's called a fixed asset. Anything that it lasts for over 3 years. We want to know about it. We want to know when you bought it, how much you paid for it, and whether it was financed. Okay? When you bought it, how much you paid for it, we need for depreciation. If you financed it, we want to know about your loan. Now, there's a lot of reasons for that. There's a lot of it is we can't tell you how your business is doing if we don't have all the data on your business. Okay? We just can't. We can't tell you. We can't give you any guidance. We can't give you any decent advice if we don't actually know how your business is doing. And the way to know how your business is doing is to make sure we have every loan, every asset, everything covered in the books. Now, we will talk to you quite a bit about how to use those for your best interest. There's actually a lot of little ways that an average small business owner can run their business in such a way that they maximize their tax savings, and that's what we want for you. So that is it for today. I will be back on Monday with some more information. There's a lot that's been coming out. I am really looking forward to hearing from you. The information on how to reach me is in the description of these videos, so please feel free to reach out. That's the phone number, our website address, and how to book online. If you would like us to do your bookkeeping, we would love to have you. Again, our bookkeeping clients get discounted rates on other services, okay? On tax preparation, on consultation, on other services. So please feel free to reach out. We would love to help you with your books, with your taxes, and help you reduce your tax bill. Thanks very much. Have a great weekend.